It's more of a legal underwrite than it is just a case of analysing the data. And ultimately, we have to look at the cost exposure, the disbursement exposure, the ability and experience of those law firms and their barristers, and take a calculated guess with it. Here, with these new weird and wonderful areas, a lot more emphasis and underwriting is done at the outset to ensure that the cases do fall within the categories of those which we wish to support.
Welcome to the second Coverex podcast. After the success of the very first podcast dealing with professional indemnity insurance, we are back. Today, dealing with after the event insurance. I am absolutely delighted today that I am joined by Jamile Molloy, who has been underwriting in the legal expense space for over 17 years. Jamie is currently head of ATE at Ignite and has worked on a large number of very high-profile litigation cases. Jamie, thanks for joining us today. 17 years in ATE. That's some shift, mate.
No law firms want me, Mike, I'm afraid, but pleasure to be here.
So section 1 of the After the Event Insurance podcast, we're going to look at the volume sector, so whereby the consumer lawyers look at volume cases, the ATE insurers regard as schemes. So post whiplash reforms, that was the kind of lead, was the RTA claims. But we know, obviously, RTA claims, the sector has obviously changed. There's less volumes in that space. And the lawyers in this area have sort of shifted away. What sort of trends are you seeing amongst these? And, are they having any kind of success?
Yeah, I think the reality is that the market is still very buoyant. But the only similarity between injury claims and these claims types is purely that they're done en masse. Otherwise, they're all incredibly different, which we'll obviously discuss in a moment. But there still remains a very healthy market for consumer legal services and consumers seeking redress in respect of wrongdoing.
And the challenges that the solicitors are facing with these new claim types, I mean, the RTAs, because it's kind of an area of law that's been going for a long time. It was quite prescriptive. Everybody knew what was going on. There was a lot of admissions of liability. So once liability is admitted, obviously it's easier for you to assess as an underwriter. Are the challenges the same?
Very different, actually. Yes. So ultimately, the claims are all still done en masse. So each law firm will run, whether it be 20 or 100 a month. But as you've alluded to, injury claims were predicated on law, which has been around for many, many years. Factually, they were very easy. From an enforcement perspective, you were going against a liability insurer. There was no concerns. There's now a diverse range of different claim types out there, ranging from property-based claims in respect of leases to financial mis-selling claims involving very complicated and convoluted areas of law, such as the Consumer Credit Act and principal and agency. So there are significant challenges for these law firms in the sense that they run for longer, the expert costs are different, and there isn't credit facilities available for the same. The law is far more complicated, so each individual fee earner isn't possibly able to handle as many files rather. So they are still done en masse, but the challenges are very different. And it's fair to say that there isn't an obvious replacement to RTA for any one law firm, and there isn't just one area of law that they can concentrate into as a replacement.
Well, and when you kind of look at one of these new schemes, as we say, you'll have the underwriting data for how many RTA claims settled, where they settled, how many did you win at trial, how many did you lose at trial, what were the adverse costs when you lost. So you're able to kind of form a view as to set your premiums. It's a lot easier when how would you deal with a new area of law that's coming en masse, kind of untried and untested?
Yeah, you're absolutely right. It actually stops you doing what you'd historically do as an insurer and analyse the data, because the data just simply doesn't exist. So as an insurer, you've got two choices. You either skirt the area altogether and write no business, which obviously doesn't work, or alternatively, you try to employ measures to underwrite it to the best of your ability. Fortunately for our experience in the commercial litigation sector, where we have to have a far greater understanding of the legal principles of any case, we are now applying that to the mass volume sector. So we will look into what the government might be doing in relation to regulatory investigations. We will look at the case law and effectively underwrite the case from a legal, or the whole project from a legal perspective, not purely an underwriting perspective. So, for instance, a topic of significant interest or an area of significant interest at the moment is undisclosed commissions, both in respect of SMEs and consumers. We know through the FCA's intervention into some of these things that there's been regulatory involvement into the banks having significant undisclosed commissions. We're aware through the SME sector that Ofgem have put out a report criticising intermediaries selling to small businesses, criticising them for the commissions that they've been taking from them. So it's more of a legal underwrite than it is just a case of analysing the data. And ultimately, we have to look at the cost exposure, the disbursement exposure, the ability and experience of those law firms and their barristers, and take a calculated guess with it.
I mean, I know that a lot of this, certainly this financial mis-selling stuff, a lot of it can actually be run via the Ombudsman as opposed to through the traditional court methods. I mean, I'm assuming on those types of things that the risk is less adverse costs. You don't get potentially. Do you look at those that are going to be run by the Ombudsman differently to those that are going to go down the traditional court route?
I think if I was sat there as a law firm, I certainly would consider, in terms of acting in the best interest of your client, both a regulatory complaint and then also running the matter through the courts. The pros to running the matter via the Financial Ombudsman is ultimately, as you said, there is no adverse cost risks, but then ultimately we've seen with the PPI saga that there was a huge backlog in these claims getting dealt with, whereas at least with the court system you have more of a finite timeline and you're going to get it concluded within 18 months. So there's pros and cons to each, and we're oddly finding in some situations that the Financial Ombudsman will compensate clients where the courts are reaching a different conclusion. So from a legal practitioner's perspective, it's worth keeping an open mind to both. And really it's a case of looking at each area and looking what is ultimately best for the client. So again, with the consumer sector, you've always got recourse to the FOS. So for instance, if there's been a missold car finance claim or a missold PPI product, you can always go down that route. But then if you look at the mis-selling of energy contracts, there isn't such a similar recourse for SMEs, so they have to go through the court process.
And a lot of these schemes, as we call them, by their very definition, the solicitors like them because they have, largely delegated authority, and delegate authority in terms of they know if they meet certain criteria, they can put these cases on cover with your authority. Given that they are relatively new, do you put more checks and measures in place? Are you asking to see prior to issue, like you have the ability to do so, or is it fully delegated authority, a lot of these schemes?
I think, again, it's coming back to what we had with RTAs compared to what we had now. With RTAs, it wasn't really, strictly speaking, necessary to write out a criteria because everybody knew what that criteria would be, which is that an individual has been involved in a collision and we're obviously alleging that the third party is at fault. Here, with these new weird and wonderful areas, a lot more emphasis and underwriting is done at the outset to ensure that the cases do fall within the categories of those which we wish to support. Invariably, that will come from case law. So again, if you take undisclosed commission claims for the SME sector, there's a case called Wood and Commercial First, which is a bit of an EFIT to follow. If you take not-weed claims, there's a case called Williams and Wastall versus Network Rail, which again will give you an e-print of what cases we would be willing to support, because ultimately we don't want to support cases that haven't got legal precedent. So there will be, from the outset, a far more detailed and guided underwriting guide for the law firms to follow. And then really, depending on how comfortable with the law firm are, we might ask they report in at key milestones, such as issuing court proceedings. We might audit them and spot check the files. We might even arrange for them to have some training with barristers we're aware of, just to make sure that they can win these cases. Because ultimately our interest is the same as theirs, which is getting these cases to a successful conclusion. And that's a team effort.
And I suppose, just picking up on what you're saying, that you or when you're looking at these new claims types, you're always looking for a precedent. I suppose it's a bit chicken and egg, isn't it?
Yes.
These solicitors will want you to have a look at these cases, to take it on, to give them the ability to go and run these for the first opportunity. Would you, in those instances, do you look at them, we will run one that we view as the best, we will give you cover on an individual basis, and if that is successful, then maybe we will consider to run a scheme? Is that kind of the way you look at it?
It can be done that way. I think it's fair to say of lawyers, the insurance market generally asks them to put their hands in their pocket and run that risk themselves first. But we're not adverse to considering that because, again, ultimately, with our commercial portfolio of litigation insurance, we are looking at each case on its merits, and there isn't necessarily a preset precedent for us to follow. So, again, the litigation insurance market is having to do far more of a technical underwrite, by which I mean look at the legal merits, not just for data. And there is the prospect that we would look to enter into some form of joint venture arrangement with a law firm where we will trial something. Because ultimately, without these law firms trialing these things, we're never going to work out whether they have merit or not. Unless someone had actually looked into the first PPI claim, as it were, we wouldn't have had that mass industry, which I think someone said to me yesterday at one point accounted for 1% of GDP across the whole country. So it's for some people to take that gamble, someone to be innovative and have a look at the merits of these cases. And we can be involved in that with the correct stakeholders and parties.
I mean, I know you touched briefly upon there about, solicitors taking some of the risk. And, Scheme ATE traditionally was about all parties' interest aligned. Everybody was, the AT insurer, solicitor, client was only successful if the case was won, and generally at the end of the case. I know now there is a current push towards funding of, the volume claim space. What is your view on funding? Are you keen to cover it? Will you cover it in certain instances, not in others? Because when we're looking at, everybody's interests aligned, it kind of gets changed when funding is involved.
Yeah, it does. So I think the predominant demand for funding in the consumer space has arisen from the fact that with the injury sector, you would utilise medical experts who would work on deferred payment terms, or you could utilise an agency who would offer you a credit facility. In the areas we've referenced, which is whether it be financial mis-selling, property claims, or anything of that nature, there isn't such facilities available, right? So notwithstanding you might need that expert needs to be paid for at the outset. And I think that has driven the demand for litigation funding in the consumer sector, along with also a general increase in investors being interested in investing in the legal sector. So the correlation is not just tied to demand, but also litigation funding is seen as a bit of a sexy asset class amongst investors now. The problems that litigation funding presents for us is the lack of alignment. Often these litigation funders are seeking that we capital protect their money. We don't have a problem with that per se, but as you say, it then means that we're not all in it together. Win or lose, these litigation funders are being repaid. However, they are often not making a return unless these cases are successful. So we will work with litigation funders. We do think they're a necessary requirement in the sector because of the disbursement burden on these law firms. But it doesn't negate the need for a law firm to continue to act on a CFA or a DBA. So the law firms are still expected to work on largely contingent terms. And it's just a case of trying to find that alignment of risk share between us, the lawyers, and the litigation funders. And not just having a lazy litigation funder who is putting their money in purely because it's protected. So we do push these litigation funders quite hard to ensure that they've done their own research, they've got their own legal team, and that they're monitoring these cases in the same fashion that we would.